Why pay more for your precious metals from the big guys with offices on Wall Street and who bank with JP Morgan? Get your fizz from the doc at sdbullion.com.
This is the Doc and Eric Dubin with the SD Weekly Metals and Markets Wrap. Joining us today is one of our favorite guests in the show, Turd Ferguson of TFMetalsReport. Great to have you back, Turd.
What's up, Doc?
You just can't ever get enough of that, can you?
No, I'm always going to say that.
Never gets old.
Okay, he gives it to Janda, too.
I do, that's true. I'll say that to him on Sunday.
Well, we had yet another takedown of the metals the first half of the week on Tuesday, with silver being smashed. I think it was about 70 or 80 cents on the day. Under $20, gold was knocked under $1,300. We saw some pretty substantial buying on Tuesday. And it's interesting, silver has been able to be capped pretty much under $20 throughout the rest of the week. It's flirting with the level here Friday afternoon, closing right around the $20 level. But gold actually had a big, strong move back up through $1,300. Actually, overnight in the Asian and London market, overnight Thursday, or I guess it'd be Friday, Friday's Asian session traded up nearly to $13.25 and is closing the week here right around $13.10. So we'll start here, Turd. What's your take on the latest takedown? Is it continued consolidation? I know both you and Eric and I have been under the belief for quite a while that the ultimate long-term bottoms are in. Do you think we'll see a third test of those bottoms, or is ultimately the $1,300 in gold and $20 in silver levels going to hold?
I'm with you, Doc. I was one of the few voices in the wilderness back in December saying 1180 was going to be a double bottom, that we weren't going lower, and we didn't. I remember doing a show with you and Eric back in about January where I said my year-end targets were 1,500 in gold and 26 in silver, which is 25-30% move. And I remember people saying, "Geez, that's it." Well, anyway, those are still my targets. And if I might tout my services just a bit, what has played out over the last month is exactly as I've described and told people to expect at TFMetalsReport. Once we broke out, there's a trend line on the chart for gold that has been ruthlessly enforced by the cartel banks. It goes back to the bounce-back recovery highs of May of 2013. And they have, as I said, ruthlessly enforced trying to keep gold under that line all through the rest of 2013, all through 2014. We briefly got above there in March. You know what happened next. A huge takedown of over $100 in 2 weeks. They kept it down all through April and May and into June, but on June 19th, we popped through that main trend line, significantly through, turning the trend, again, off of that base of double bottom. It looks great. And what I started warning people, though, was whenever you get that type of a turn, invariably price comes back down to that line. And the most bullish thing that it could do is, in a sense, ride that line lower instead of having it be resistance, using it now as support. We waited all through July for that to happen, and finally it began to happen in the latter part of July. And on the weekly chart now, we've gone down and tapped that line 3 times and now have burst higher this week. It is a very positive development technically. And I'm very excited about the prospect for gold, even though they beat it back today, which wasn't surprising because we had the audacity to get over the important 1320 line overnight. So they shoved it back with a whole bunch of contrived selling before the New York market opened and then during the day-to-day. But that's okay. That doesn't change fundamentally what has happened to the chart and how it now looks. I'm very excited for a move through the rest of this year. My price targets are still intact. I still expect us to get it to at least $1,500 before the calendar flips, and $26 in silver as well.
I'd like to build on that too, as well as our show last week when I was talking about how there was a deflationary whiff kind of priced into the market by a lot of traders, as can be expressed and seen in the price of oil, and even silver's lag to some extent can reflect that. And we're seeing that yet again coming through in the market now with oil being up today, or up yesterday, but through the majority of the week we saw some pretty significant downturn, piggybacking on what happened in the week before. This all the while when the Middle East is basically on fire and looking to get a lot worse. So you would expect to see a geopolitical premium in oil, but in fact it's the exact opposite. And what I think all of this kind of stuff is showing, and oil is a really particularly valuable signal when it comes to the health of the global economy, kind of like copper, in that it's showing that a lot of people are beginning to come to the realization that the economy is slowing down a lot. Meanwhile, the Fed is continuing its tapering, and the general perception is that there's less probability for support coming to financial assets with the Fed, doing its tapering thing. So it's really interesting to see that gold is performing very well in the last couple of days, where silver is sucking eggs, and we see over in the oil market this continued signal that there's a lot of people here that are actually afraid of deflation, and maybe even some kind of a systemic, or maybe not, just shy of a systemic issue, but nonetheless, banks in Portugal or Argentinian default or what have you, that there's being priced into the markets, at least to a percentage that we can't quite define, but nonetheless something that speaks to fears of deflation. And it's just interesting to keep a tab on that. So I want to underscore that.
Eric, I would take a slightly more unconventional view, just to throw this log on the fire. I mean, there are many historical accounts now how through the 1980s, the Reagan administration worked with the Saudis and others to flood the world with oil, to drive the price down, thus wrecking whatever income stream the former Soviet Union had. It would not, given that we know, or at least very confident, that almost every single market is now manipulated to create this kind of illusion of wealth and prosperity and well-being. It would not surprise me in the least, and they certainly have the capability to just simply be printing short contracts to drive the price down to hurt Putin and the Russians. It is counterintuitive, and you think, geez, with all this geopolitical stuff, how could oil be down 10% in the last 6 weeks? That would not, well, let's put it this way. I don't think it would surprise any of us if you think that might be possible, that somehow the Fed, through their primary dealer banks and some of their other allies, through all their different offshore accounts and hedge funds and things like that they're shorting the crap out of crude oil, paper crude oil, to drive price down.
That's a very good point.
So that's just one thing.
It's probably happening.
Yeah, and then on the other side, on silver, the damage to silver, technically, when they jammed it down 3% back on Tuesday, where gold has turned and has broken the downtrend from July the 10th, silver is not. And it's got some work to do. Once it gets back above 2060, which is a key level that we at TFMR have been watching off and on for quite some time, I'll feel good about it. But it's going to take some work. I mean, that's what, 3% from here. It's going to take some work to get there. And it's such a tiny market. I mean, there's maybe 25 or 30 large institutional type hedge fund type accounts that are the main large traders there. I mean, and so at their whim, whether there's excitement to get it to go up or down, or whether they're led into buying or selling by J.P. Morgan, is what's going to impact whether silver is going to, how long it's going to wallow here around 20. I mean, the damage technically that was done Tuesday is going to take it a little while to work off, but. Getting back to gold, though, I'm very, very excited about gold. 1320, getting above 1320 is the next goal. After that, 1330, and then 1345. And
so, is it a situation where you see gold kind of pulling silver higher here, Turd?
Yeah, it would be. And don't overlook. I mean, the open interest, the total open interest on COMEX gold is at multi-year lows. Just a couple of days ago, it got all the way down to 358,000. That's barely more than half of what it was 4 years ago. I mean, people have figured out that it's a rigged game of HFT algos and the cartel monkeys, and why even fiddle with it, So we're sitting at, even though it's rebounded a little bit, I think the open interest now is about 367,000, down from, it was over 400,000, not, just a few weeks back. So there is a wad, for lack, there's a good technical term for you, a wad of spec buying that is just waiting in the sidelines to come charging back into gold. Now, granted, the cartel banks will issue naked paper to meet every bid that comes in, but nonetheless, if we suddenly were to get a geopolitical event or or a continued sharp drop in interest rates, or something that just sparks money to flow back into the gold pit, and you see open interest go from 360 to 380 to 400 to 420, and most of that is on the long side, I mean, that's going to drive price higher. And you start looking at getting above 1345 and getting above 1360, it becomes a bit of a virtuous cycle as these chart-based technical funds look at that and go, well, damn, this gold looks pretty good here. And then they start buying more, and the thing kind of tends to like I said, be a virtuous cycle. That's the kind of action I expect as we get going through August into September, and that's what's going to carry us through the remainder of the year back toward those targets that I gave back in January.
And I think, interestingly, the bullion market is kind of reflecting that somewhat lack of interest that you're seeing in the open interest, as mint sales are falling, particularly the official coin sales like the Silver Eagles. Back in March, we were looking at about 5.5 million coin sales, and it's kind of been on a decline ever since then. We are still at a pretty strong pace for the year at over 27 million ounces, but we only had 1.9 million ounces of Silver Eagles sold in July, closing in on 1 million here in August. So it's been really a sustained downtrend over the past 5 to 6 months, and really anecdotally with what we're seeing, talking to all the authorized purchasers at SD Bullion, one of the main authorized purchasers of the U.S. Mint that we talk to regularly, they haven't placed any orders for Silver Eagles in a couple of weeks, and they're not planning to for another week or two. They've got plenty of coins, and they're trying to get rid of what they have. Don't expect those numbers to change too much unless we see a bit of price volatility here that brings buyers back into the market. We are still seeing a steady customer flow, but right now there's a lot of people really focused on numismatic and numismatic type coins. This week we had there was a release of the 50th anniversary, a proof coin of the Kennedy $half.
Yeah.
That was double dated 1964 and 2014, and it almost reminded me of when the Wii or Xbox came out, with everybody lining up to buy it in person, and the U.S. Mint originally, I think they had said like 2 or 5 coins you could buy, and then they cut it down to 2, and then they cut it down to 1. So things like that, and then we also had
suspended sales.
I haven't seen that.
Yeah,
okay.
That was out today.
So they've now suspended sales today. So they've gone from you can buy 2 to 1 to none, I guess.
So why? Why can't they make as many as people want?
Yeah, it's a good question. These are numismatic proof coins, though, in kind of a fancy box, and they're selling for quite a bit. I think it's $1,260 for a half-ounce gold coin, so it's kind of pricey. So a bit of excitement.
Well, I guess we are talking about the government.
Yeah.
Yeah, I mean, this is probably not something related to suppression or what have you, but just dumb inventory planning.
Yeah, most likely. And then really the other couple other things that the market's kind of excited about, the second Birds of Prey coin, the Canadian Bald Eagle, is coming out, and then the Mexican Libertad, it's August, and Mexico's finally released their 2014 bullion coin, as well as the new turtle from Fiji. It's not the Fiji turtle this year because it's a different name on the island. I forget what it is off the top of my head. So there's a few things like that but just overall, the market, the volume's not what we saw a couple of months ago, and definitely in 2013. I don't think there's any products right now that are on delay, whether it's private round or official government mint. Pretty much everything is available for immediate delivery upon paid receipt. So I continue to say it's a good time to be an accumulator of precious metals. Premiums are at or near lows, and availability is good, so you're not seeing delays and you're not seeing high premiums, and you have prices that are close to their bottoms percentage-wise. So while there might not be a lot of excitement, I think in the long term it remains an excellent time to either begin your precious metals accumulation or continue to add to your stack.
No question about it, and it is kind of anecdotal and but also contrarian, but that's the time you want to do it. When interest seems low, that's generally the best time to buy.
Jared, since you mentioned open interest in reference to gold, we've had Bill Murphy on and David Morgan in the last couple of weeks, and I've asked them what they think about what the heck is going on with the record silver open interest being high. And you have any thoughts on that? I mean, David Morgan basically came to the hypothesis, and none of this stuff can be proven per se, but that something may be going on in the OTC market where large traders are trying to position to be able to at least call upon COMEX inventories to cover something that they got bigger going on in the darker, less visible OTC world of bullion trading. But other than that, I mean, have you given any thought to this and seen any interesting theories that can explain what the goofiness is going on with the silver open interest?
Yeah, that makes as much sense as anything, and David certainly is an expert in silver. You're right. We are, I think, even today at 158 or 59,000 contracts open interest, down just maybe a couple of percent from all-time highs, up at about 166, and well above the maybe 130 to 140 or 50,000 levels we saw back in 2010 and 2011. You think, well, why is that? And that gets to the crux of your question.
Gold and silver usually march together.
Yeah. Why has everybody left the gold pit? But you got this record level of interest in silver when it's all concentrated, as we talked about earlier. The only other thing that I'd add, I can't say, like I said, I think David's answer is as good as anything I could come up with. The only other thing I might add is, at this price, and I should add before I say this, we're not seeing, some big significant uptick in deliveries out of the COMEX either. I mean, every delivery month is maybe 3,000 or 4,000 contracts, and that's about it for COMEX silver. But I would say that when you look at a cost of production being $18, $19 an ounce, it is certainly far less expensive and far less arduous of a process to mine, if you will, silver out of New York or London or Singapore for that matter, or Shanghai. Certainly a lot easier and simpler to mine metal out of those exchanges than it is to deal with the EPA and the Bureau of Land Management of whatever country and everything, and the labor unions and everything else to try to actually mine it out of the ground. And so there may be something to that as well. Like David said, maybe it's an offset of having to potentially deliver someplace else. It could be. At this point, I don't know why I continue to put any stock in what the CME or what the CFTC reports anyway. The CME, as you know, put that disclaimer suddenly and magically on all of their gold stock reports, with the vault reports. They put that on a year and a half ago saying, hey, don't look at us. If this isn't reliable, we're not standing by. We have no idea, basically.
Yeah, and to remind our audience, their data comes from the bullion bankers.
Right. And then you've got the CFTC just last week fining J.P. Morgan a whopping $650,000 for completely falsifying data that they give the CFTC and in doing it for years and in their terms hundreds of times. So, like I said, I've got to continue to report on what these reports say as a data point, but for people to put any stock in it, how can you? How can you look at that stuff and think that it's valid or helpful in any way? It's totally misleading.
And touching on Shanghai, where you mentioned their turd, we are seeing continued silver demand over in Asia as the Shanghai exchange now is down, I think, over 90% on physical silver from its peak in the first quarter of 2013. There's been basically 1,000 metric tons withdrawn from the Shanghai Futures Exchange since last March 2013, leaving it now with a measly 148 metric tons at the end of July. It's the lowest inventory level they've ever had in the Shanghai Futures Exchange. So, while the retail demand maybe cooled off a little bit here in the U.S., it doesn't seem to have cooled off whatsoever over in the East.
And that's wholesale type stuff too, and maybe that's lends credence to David Morgan's argument. If you are, maybe it's Eastern interests that as a backstop to delivery failure in a place like Shanghai, they just go long and just keep rolling contracts in New York, figuring, hell, we'll just take it out of J.P. Morgan and Scotia's vault in New York if we have to. Now, who knows? Yeah. At any rate, it belies a very tight silver market. Ted Butler often writes about, the kind of hand-to-mouth quality of the silver stocks, again, to the extent that they're reliable. But you see these movements every week of millions of ounces in and out of the silver vaults of the COMEX. I tell you, one of these days, Alice, it's going to get really, really interesting, and there's going to be quite a squeeze. And I'm just going to patiently add to my stack and wait for it.
Shifting gears a little bit here, the other story that's been dominating the press, particularly the mainstream, but also it's all over the alternative and sites like Zero Hedge as well is the story of the Ebola virus. And we just saw a chart, I think, last night that came out where the number of cases are going exponential. They're going parabolic. Just this week, we started importing patients into the U.S. for treatment, which sounds like a great idea from a medical perspective. The best way to keep the virus from reaching our continent, import 2 or 3 patients and start treating them here.
Yeah, exactly.
So what's your guys' take on this whole crisis and cases that there's been a lot of people in the alternative media that are basically claiming this is just a trumped-up crisis to push their solution of a vaccine and make billions on the vaccine, that overall the number of deaths really versus even H influenza or the measles, 1,000 deaths globally really is nothing. I mean, in the U.S. we have multiples of that every year just with influenza. So is it really a case of the media kind of running with this, that there's some elite interest in a vaccine, or do you think we really have something to worry about here, Turd?
Probably in the end, yeah. There have been enough movies made, now of outbreaks and stuff like that, so this kind of thing, and this particular disease just seems so nasty that it's frightening to everybody. And then it also fits into that kind of grand scheme of, we're all worried that some type of martial law is going to be declared and never let go of, and so anyway, all of that kind of plays into this kind of perfect storm of something to be worried about. But frankly, it is something to be worried about. After I say all that, one thing that makes TFMetalsReport unique is the kind of the community aspect of it all. And within the community, we've got such vast experiences amongst all the different members, and they freely share what they know. And I have a forum page at the site that has as a topic the Ebola outbreak, and it's run by a couple of distinguished medical professionals who know what they're talking about, and they're putting hours and hours of time in trying to keep everybody at the site ahead of the curve. And I got to tell you, these 2 guys, I mean, they're pretty nervous. They, not like they're nervous guys, so they're twitching all the time. I mean, they're just nervous about this and the implications of this being some type of mutation from what we've seen before, and the ability of it to be spread easily from person to person, and then with people traveling all over the globe. We've had pandemics before. I mean, what was it, 1918 or whatever it was, with the Spanish flu that came from Kansas pigs or whatever that was. So it's not unprecedented. And like I said, these 2 guys on my site that are really on top of it are the ones that have me probably the most concerned, because, if they're worried about it, then maybe I should be a little more worried about it too, and not just write it off as hyperbole.
Yeah, and then the point about martial law is really quite sobering, because something that is high consequence once infected, but less transmittable than, say, a common flu, which fits the profile of Ebola, also happens to be the kind of thing that the powers that be in response would find rather convenient, because
right.
All the great world leaders around the world and the powers that be themselves can insulate themselves reasonably well while they lock down everybody else.
Right.
So
right.
This is definitely something to keep an eye on. And the section that Turd is speaking about with article postings and whatnot, we'll put direct links into on our write-up section for this show.
Hey, thank you. I really encourage it's a free forum. I mean, it's not like I'm making money off of sending people there. It's a free forum. Boy, is it informative, and these guys are on top of it and have been well ahead of anything you might pick up off the Twitter or certainly off the news. Far more concerning, though, even than that is, this thing where the U.S. and the West and NATO are seeming to do everything they can to provoke Russia into some type of military event. Man, I tell you what, if you really, if I were to really tighten my tinfoil hat for a moment, it sure seems to me like they are doing this on purpose for the goal of having a rationale, to a boogeyman to pin the global collapse and bank holiday and everything on. Don't blame us. It was the damn Ruskies.
Yeah, I've worn that tinfoil hat a couple times too this week, and fits rather well.
It sure does. And boy, when I really can't. I really don't understand. I'm at a loss for any other explanation as to why The West has traveled down this road now since before the whole Maidan Square and everything that took place. You know, there was clearly a U.S. fomented revolution, if you will, in Ukraine in the first place.
I go back. Sorry to interrupt her, but I go back for those who watched the Winter Olympics, and it was pretty clear that the mainstream media was beginning the agenda then against Putin.
Yeah.
Yeah.
This is before
and in
anything.
fact, I think it was around that time. Putin had said openly that, well, you know, in reference, and I forget the specifics, but in reference to something about the financial issue that they were dealing with and debts and all that, he said, well, you know, no one's going to care about that because war is coming.
Yeah, exactly.
And that was pretty amazing for him to just throw that out there because he's reading the same tea leaves and he's on the inside and he can see. And for him to say something like that, you got to wonder, well, gee, is that just sheer propaganda and positioning or things and really just a reflection on reality?
Right.
And the reality since then is, you know, speaking to war.
We did have quite a big escalation in the trade wars this week with Russia banning all imports of Western food. I think it's both all of the EU as well as I think they included Australia in it. And then today on Friday, we have reports that Ukraine is threatening to totally block off Gazprom's natural gas pipelines to Europe. So those are two big escalations of the trade wars.
Yeah, and with everything else that's going on with the BRICS and the BRICS Development Bank and the BRICS Foreign Exchange Fund and everything else, again, I mean, it sure feels that way, that they are, I don't want to call it a false flag because this is a lot bigger than your typical false flag. I mean, it just seems as if we're being driven toward a manufactured event that they can use, you know, as cover.
Yeah, and then, you know, the initial stages of this kind of stuff always default to, or almost always default to, just the hubris of the foreign policy leadership establishment thinking, oh, yeah, we can push Russia around, they're not going to do anything. And, you know, Putin's basically non-reactive stance for many months. I mean, this latest round of the sanctions that were declared this week is the most significant thing Putin has done in response to the pressures of the West going after Ukraine. And, you know, even over the course of the last the decade plus of time, NATO has been expanding on Russia's borders, and the missile defense system has been put into countries in Poland and so forth. And all the while, Russia actually has not been very reactive. And then in the latest instance with Ukraine and the United States conducting a colored revolution and probably being behind the snipers that were blowing people away that stirred things up, and I believe it was in March. You know, this is now the first time that we're actually seeing Russia do something significant, and despite all the propaganda about Russia supposedly invading Ukraine, which is a psyop, and on and on and on. So it doesn't look good. You know, all these kind of things have the potential for initially being just a product of leaders thinking they can get away with stuff, and the West flexing its muscles and trying to push back against Russia, but then all of a sudden they just spin out of control, and you get things like a World War I scenario where just dominoes start falling, and lo and behold, you know, tens and tens of millions of people are dead after many years of trench warfare. And unfortunately now we got nukes.
And as it relates to gold and silver, what people need to be aware of is that the U.S. and the West hold no cards, and that Russia and China and the other dollar creditor nations, at a time of their choosing, whether we force them into it in the next few weeks or months, or whether it's 5 years from now, but at a time of their choosing, they're going to establish some new alternative global currency to be used in trade, and it's not going to involve the dollar, and that's going to cause, or at least push along, this dollar collapse and devaluation. And so by backing Russia and by extension, you know, the other BRICS into a corner this way, we're just facilitating and we're just speeding up that eventuality. And so that dollar collapse, that dollar devaluation is extremely metals positive. So even if you're listening to us talk and you think, oh, yeah, there's not going to be a war, blah, 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 well, whatever. Yeah, hopefully there won't be. But what we are doing is encouraging, unwittingly or wittingly, this next phase, this next global economic system. And that's all going to be, that's very positive for gold and silver and people that hold it.
All right, well, I think that's a good place to wrap up here. We've given people enough things to be scared about for one Saturday here, guys.
Yeah. Enjoy your weekend, folks.
Go have a couple more cups of coffee. Before we let you go,
well, you can.
Turd, if you can tell the listeners, we've been advocating the free side on TF Metals Report, but you also have a subscription service as well, so tell the listeners a little bit about that as well.
Well, and just kind of tout what I do. I mean, there's a reason why I have got the site in the first place. Is I have a somewhat of an ability to predict short-term price movements, and I've been pretty good the last month or so, that's for sure. And what folks that use my subscription service use it to time their physical buys. Some folks maybe even use it for trading. I don't know, but I think it certainly pays for itself, especially considering it's only $10 a month. So I would encourage people to check it out. It's well worth the money. Again, it's at tfmetalsreport.com. The whole site's free, though. Outside of that, all these forums we've been talking about and the other conversations that take place there. But if you want a little help in tracking price, I can certainly help you with that. And that's all at, again, tfmetalsreport.com.
All right, we encourage our listeners to check it out. Well, Turd, thanks for coming back in the show. It's always a pleasure to have you, and it's an enjoyable conversation.
My pleasure, Doc. I always look forward to it.
All right, for the Doc and Eric Dubin, thanks for tuning in to the SD Weekly Metals and Markets.
Those individuals who are in charge of monetary policy around the world, I think they're very much aware of what is coming. When I've asked Federal Reserve Chairman in the committee about this, they never said, no, that's not going to happen. They use the word orderly. As long as it's orderly, it seems to be okay.